All right, here we go, guys. Let's get us up there. This is the inaugural episode here of Beards and Bitcoin. As you see, we all have beards, and we're all big fans of Bitcoin. So hopefully you guys are too. We'll probably stumble around a little bit here at first, guys, just kind of getting into the whole flow and figuring this out. But again, it's myself, Christopher Inks, founder and CEO of Texas West Capital, and then Andrew Parish and I'm sorry, I'm going to stumble over your name for some reason. Tillman Holloway, there of Arch Public. And so, guys, the links to follow us are below on Twitter there, or X, or whatever the hell they're calling it today and tomorrow and whatever, as well as a link there to Arch Public there. So good to see people joining in here a little bit. We'll have to probably, get some more word out there. But, again, we started last Friday, guys. I kind of tossed it out there real quick, and I said, hey, I think we should do this show. And these guys were like, let's do it. And so then there was a holiday weekend, and then it was one day of work, and here we are. So good to see everybody jumping in. How are you guys doing there, Andrew, Tillman? How are you guys?
We're doing fantastic, and there's this is an appropriate time to do a show like this because we all of us on this this stream or podcast or whatever we're calling it have been involved with Bitcoin for years. But we found ourselves in the middle of this inflection point where Bitcoin it's truly going mainstream. Not only is it a part of the traditional financial market conversation, but over the last 2 weeks, it's become a really big part of the political conversation. So, finding ourselves at the quote unquote nexus of the universe and Bitcoin being smack dab in the middle of it is really something, something.
Yeah, it's been quite amazing, hasn't it, Tillman?
To be in the right place at the right time. That's what opportunity, that's literally the definition. So, yeah, I'll say I'm glad that there was a little bit of a pause between the time you announcing it and the time we got on, because boy, have there been a lot of things that have transpired in that time period. I mean, there's so much to talk about. It's pretty ridiculous. Yeah, I mean, the question is, where do we want to start, I guess?
Well, I mean, I guess we can jump off since you're speaking here, man. Well, why don't we jump up with the whole Riot thing? Riot, trying to do the hostile takeover of Bitfarms, and Bitfarms basically saying, yeah, no. And so Riot kind of took a little hit there, and Bitfarms jumped on that. Oh, there he is.
Okay. Yeah, he's lost his audio there real quick. So let me jump in. He's going to be able to discuss at length, sort of the math behind the reason why that there's going to be consolidation in the miner space. The halving really has everything to do with it, right? So your ability to generate quote unquote Bitcoin revenue based on hash rate associated with new math after the halving. Not surprising that there would be consolidation across Bitcoin miners. It's just the way that the math works. And so that math being applied to publicly traded companies, you're going to see consolidation associated with quote unquote hostile takeovers. And what usually happens in a hostile takeover bid that doesn't work, at some point the acquiree of that hostile bid gets acquired anyways, somehow, some way. Either by the initial firm that tried it the first time, then they go back, reset the board, and make it happen a second go round, or the rest of the industry sees opportunity and weakness with that organization, and they go out and get it in a different way. So, Bitfarms is it's up for bid would be the right way to look at it.
Yeah, thanks. You actually picked up exactly where I was gonna, where I left off. I think consolidation is a healthy part of a maturing market, right? You want to see people that spot inefficiencies that then go after those inefficiencies, because there's opportunity that lies in those inefficiencies and correcting them. So I see that as a healthy indicator that the market's maturing, and that we've got we've got a long way to go, in my opinion. I don't know what I missed, but my audio in I couldn't hear you, and I bet you couldn't hear me. But long and short of it is, I think we've just started that process. I think the halving is a natural culling of the herd, and the larger you are, and the more leveraged you are. And I've talked about this with you, Chris, before. Um, the allocation of miners is the most misunderstood, overlooked, impactful piece of whether you're a profitable mining company or not. And what do I mean by that? I mean that every single one of these machines that you buy becomes a giant paperweight at the halving. So if you buy them with 1 year left, you better have your ROI within that year, because you're not getting it after that year. Your cost to operate will preclude you from reaping a positive ROI on that machine. And the further you get out from that halving, the worse the contribution to the overall hash rate becomes. So the less the incentive becomes. So it's one of those things where if I'm a big company and let's say through no fault of my own, I have to grow or die, right? I've got to keep the hash rate growing. Well, let's say I put a large order in. Let's say the manufacturer, be it that there's 3 of them that can fulfill institutional orders. Let's say Bitmain's the one that you have it with. Bitmain can't fulfill the order. They say, hey, we're going to be delayed by 6 months. Well, that 6 months literally could be the difference between whether those machines make you money or lose you money in that current cycle. And so, there's going to be a lot of people that live and die on swords that they can't control. And there's going to be companies waiting to pick up the bodies and harvest what they can from them. So, it's a healthy sign to me.
The paperweight analogy to give a little more color to that, right? So both Tillman and I, have some version of sort of man caves in our houses. And we have little spots in those man caves where you have old miners that are just decoration, right? They're decorative, right? They're of no value other than remember when, right? They're pretty cool to look at. You put them in a case and, create some sort of, art associated with, an older Bitcoin miner. But that's really what they are. They become a paperweight. They become an artifact. And when you think of it that way, and think you have thousands and thousands and thousands of these things, and the way that the halving works, and the trickle down effect of the halving and hash rate and all the adjustments there, turning itself into a quote unquote hostile takeover. It's the reason why investing in miners is, it's an exercise in due diligence, as opposed to, I'm kind of getting another piece of investing in Bitcoin here. Probably shouldn't think of it that way.
They look at it, and I've been on a lot of mining spaces, and I've joined a couple of the mining communities just because I love hearing about all the developments that are taking place in the space. But, I think the centralized model will change over time, which will inevitably change these mining stocks. I think they look at it as a second play to MicroStrategy. It's like they believe it's a leveraged play on Bitcoin. And you can't argue with that. I mean, in some way it is, but the industry is so backwards from what the real world is. There has to be a correction. Both can't exist forever at the same time. It's like the universes will collide. What do I mean by that? Here's what I mean. You're chasing inevitably higher yields from a mining perspective. You want more Bitcoin, right?
Yeah.
But there's less Bitcoin to get, right? So you're chasing a curve that's getting steeper and steeper and steeper, and it's costing you more and more money to chase the curve.
Yeah.
And so that's a concentration risk. That's bringing people from being minor mom and pop miners to what we've seen now, publicly traded companies that are betting big money on it and raising big money and doing all sorts of fundraising that wasn't available to the mom and pops, and that's why they're able to stay in the game. They command the purchase ordering power from the three largest manufacturers. They get favorable delivery times. They have profitable yields during the halving cycle that they participate in. They get more and more confidence, more and more people. It's, but it can't be everybody. There's only so many miners that can be produced. These are ASIC miners that are produced by three manufacturers. They're all in China. And if they turned off the spigot tomorrow, you can't imagine the fall off in hash rate. You can't even comprehend what would happen 4 years from now if those three companies, if Chinese enforcement officers said, you are going to stop making these environmentally caustic machines, and they shut down the manufacturing facilities. Like, you can't believe the head start that these companies have. So there's a real need, and we've seen Jack come out recently and say that he's investing in domestic mining functionality and capabilities, and it's gonna fill the vacuum. I'm not saying there's this catastrophic event on the horizon, but what I am saying is that these mining stocks are going to be as dynamic of a landscape as you can possibly imagine. And so, if that's your fancy, then do what suits your fancy. It's just, you should probably know that you're not investing. I see a very large disjointed nature as it pertains to, if someone asked me what's riskier, putting some money into Bitcoin for the future or putting some money in the Bitcoin.
No, exactly.
Can y'all hear me?
Yeah, we got it.
Can you guys hear me?
Yes.
Yeah. Mm-hmm. Yeah, we can.
I can't hear you guys, but I'll finish my point and I'll jump back on. But the bottom line is if somebody asks me, hey, what's more prudent? The chances of the mining stocks not going through several inflections and iterations of material economic change is almost zero. But like, I think there's a very high probability that you ride a very wild roller coaster. And if you've got really smart executives at the top of those companies that can pivot into those opportunities, man, you could be on the right roller coaster. But it's not the same equivalency in my mind by a long shot as saying, yeah, I'm going to buy some sats and put it under my pillow for a rainy day. I'll jump back on because I can't hear you guys.
Yeah, it's a the mining story associated with the financialization, so to speak, of Bitcoin as an asset. It brings me back to one of the points that I wanted to make and then talk through on this on this show is there currently is no meaningful downside narrative associated with Bitcoin and its price right now. We've gotten to a point, and I lived through 17, 21, and even cycles before then. And I made this point on a post a couple days ago. In 2021, 60 days after the high, we were down 48.5% from the high, and it was immediate. It was high volumes, and it was quick. But the architecture associated with where does Bitcoin go, who buys it, the channels that it moves through is so dynamically different than it was in 2021, wildly even more so different dynamically than where it was in 17, right? So FTX doesn't exist anymore. Binance US does not exist anymore. Binance Global is effectively run by the feds here in the United States that are auditing their books every week, okay? So you've now had this consolidation that's turned into the Bitcoin ETFs. BlackRock has just passed Grayscale as the biggest Bitcoin ETF on the planet. That was kind of preordained, wink, wink. And then, but here's the biggest truth that should be watched is that behind all the Bitcoin ETFs is Coinbase, right? So
Yeah.
Coinbase has picked up enormous volumes. They've grabbed all of the waning volumes associated with Binance, the waning volumes associated with other offshore type of exchanges, and they've filled it up with the ability to manage massive amounts of Bitcoin, which is being purchased every day by the Bitcoin ETF. So you have a machine that is turbo powered, almost diesel powered by traditional financial giants, BlackRock, Fidelity, and the like. But the giants, there are even bigger giants behind those ETFs: JP Morgan, Goldman Sachs, UBS, Citigroup. And what do I mean by behind the ETFs themselves? Well, they are simply the approved, authorized participants that effectively allow the process of buying and selling of the shares associated with the Bitcoin ETFs. So you have the collective totality, of global banking superpowers in Bitcoin in a serious way, and expecting there to be significant profits that will follow. So that's just one of the upside catalysts associated with it. And I was in Spaces, I think yesterday or the day before, and there was conversation about, we haven't even talked about some of the macro issues associated with Bitcoin. One, you're going to have a political discourse that, whether good or bad, is going to talk about Bitcoin from here until the election. Well, what does that mean? There's no such thing as bad press. If Bitcoin is talked about by both parties, one's banging the drum it's bad, the other banging the drum that it's good, all the public hears is Bitcoin, 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 right? And then, let's throw a little, spice into the soup, and the fact that there are potentially, it's my guess that there's going to be at least one rate cut before the election. Why? Because everything's political, and the reigning party is going to put a little pressure on the Fed and a rate cut. So you get a little more easy money, right? And imagine if Trump wins, you can bet there's going to be more rate cuts, right? Well, what does that do for Bitcoin? Well, it does the best thing, right?
I think there's a underlying ETF mechanism here that is overlooked, and it's very important. So if you look at like the silver ETF, for example, if everyone took delivery of the futures contracts of the silver market, there would not be enough silver to go around, right? But that's not the reason why people buy silver anymore. They're buying it for a different reason than to store it in their basement. You rewind time, and there was a period, 100 years ago, where pretty much everybody stored silver in their house, right? And so what's really interesting about the Bitcoin ETF and this constant demand, as long as people are buying the ETF, well, number one, you're forcing the market makers that are the best financial engineers in the universe to hold the supply, which is I don't think we can even fathom the genius that could be engineered if you were the market maker and you held the largest supply of Bitcoin. And the ETFs, in my opinion, are the largest funnel to removing self-custody and taking really centralization of the hardest asset that's been created from a digital perspective, at the very least, into the custody of the people who know how to use it the most, or what politicians deem to be the people who know how to use it most. And so I think that you're going to see a swelling of price that's more modest, because they're efficient market makers. They want demand and supply to meet perfectly in the middle. There's not going to be the funny candle manipulations that we saw 5 years ago in the market, where the price would fall out and every single exchange was showing these God candles that didn't even make sense, and immediately the price was back up where it was. That's not going to happen in the game that we're playing today. And so I've again said this a lot, and I'll reiterate it. I think the journey of Bitcoin just began, because the journey that we've been on was just the prerequisite classes that were needed to get into this class. This class and the final exam of this class is yet to be determined, but it's very promising because we're in Harvard and the professor loves us. And the professor wants to build an entire curriculum around this class and the genius of this class. So there's just so much budding potential from financial engineering and financial markets perspective, using Bitcoin as the collateral piece. And if they're holding that collateral piece, then there's limitless flexibility on a layer 2 protocol, right? Because you have the backing of an asset that so leaps and bounds ahead of the rest of the market that you can absorb failures just like BlackRock can absorb failures with the blink of an eye and just move on down the road, and it doesn't affect your overall mission. And so I think the overall mission, Larry Fink said, is like, we're going to tokenize everything. How do you do that? Because there's so much risk in tokenizing everything, like so much technological risk that no one can get their arms around other than a few humans on the earth. And so, how do you build a model that's sustainable in that regard? Well, it's financial engineering. It's insurance-based models where you've diversified your interest across so many different fronts, and you have basically a bulletproof backstop to all of them failing and one succeeding, and that one being large enough to absorb all of the failures and then some. And I think that's what's happening here, is like they're going to progress this on the back of Bitcoin being the digital asset that's the digital gold, and they've deemed it as a store of value, and I think it'll continue to grow as such. I would venture to guess, though, that we've got a lot more maturing than most people think from a horizon or timeline perspective. I think that we've kind of just begun the race.
Well, you've got to know too that, as Tillman was saying there, and peeling back the curtain a little bit more, there's going to be options and derivatives products that are attached to trading of Bitcoin ETFs sooner than we think, because there's money to be made there. There's lots of money to be made there. And these institutions that are now heavily involved, that's why they exist. They exist to create products that generate revenue that goes to their bottom line. And options and derivatives are highly profitable for not only the exchanges that they trade on, but then of course the organizations that package them in some way and sell a product associated with those particular instruments. So options are probably 3 to 6 months away on the Bitcoin ETFs. And then in the middle of that 3 to 6 month period, you're going to get Ethereum ETFs that get fully approved. And then 3 to 6 months after that, you're going to get options and derivatives associated with the Ethereum ETF. So there's going to be an entire, not just suite of products and instruments associated with the trading of quote unquote, crypto in the United States and globally. But it's going to be more than a suite. It's going to be an entire, 5-star hotel. And BlackRock and JP Morgan and Goldman Sachs don't get into a business to break even or to lose money. They just don't. It's preordained that, okay, this is a market that we're going to be in. We're going to create products around it, and we're effectively going to control the process by which people get access to it. For example, I saw somebody put in the questions there about the wirehouses. Mm-hmm. The wirehouses effectively are already on board. It's just they've gatekeeped the access to Bitcoin ETFs, and you've got to be in their private wealth management arm of those organizations, whether it's Merrill Lynch, UBS, Morgan Stanley. Up until this point, they've kept it at you've got to be somebody that's qualified for our PWM division, which is generally 10 million or more long at the firm. At Goldman Sachs, it's $50 million or more long at the firm. and or you don't get access to the Bitcoin ETFs. That will change, sometime in the next, I don't know, 4 to 6 weeks. I just had a conversation earlier today asking a source about that shoveled me some really good stuff. He said it's coming. He's like, I don't know why they're dragging their feet. So giving further, this is again, if I probably could have written down 9 different catalysts associated with Bitcoin and the Bitcoin ETFs, which will keep the price in that channel that you've talked about, Chris, 59 plus above to 70. And then once it, breaks 72 again, even higher. I could have come up with 9 reasons. So another reason is at some point, these wealth management organizations that have trillions of dollars in assets, each have trillions of dollars in assets inside their organizations. At some point, they will open up the floodgates and not gatekeep just for their biggest and best clients. It will be offered to clients with $800,000 long at the firm or $2 million long at the firm, and those conversations will be had and those allocations will be done. The other thing I'll say is the Ethereum ETFs in the short term will provide a catalyst to having a conversation about crypto and push more money in the Bitcoin ETFs. Why? Because Bitcoin is a brand. Ethereum is a back of the bottle ingredient that most people don't know about. And so wealth managers will default to, I haven't done much work on Ethereum, but Bitcoin's been around. You know it. I know it. BlackRock's here. Let's start there. Let's start there with a small allocation to quote unquote crypto in your portfolio. So the large majority of inflows will still be on the Bitcoin side. In other words, that's just another catalyst for higher Bitcoin, right?
Yeah.
I don't know.
I'm not worried about the Ethereum ETF and the outcome there because it just tells me that they haven't used it yet. If you want to be if you want to turn a believer in Ethereum into an unbeliever, have them use the network a lot. It's the first of its kind, and it's a great network to launch ICOs on. If there's an infinite money supply and fever involvement at a pace that's not sustainable. But when you talk about like a sustainable financial environment, when you talk about sustainability, you got to look at like, do I think staking is here to stay in the crypto space? Absolutely. I mean, you think BlackRock doesn't know what staking is and doesn't have that right in their sights? Because what's the purpose of having the Bitcoin, ETF and the cold storage supply of Bitcoin if you're not going to use it, right? If you're not going to leverage it at like a bank leverages gold to lend money out, to lend fiat out. And so I think we're just at the precipice, like at the very beginning of this, accumulation of, I would say that one of the hardest things to pick right now is like a lot of people are saying there's going to be this alt season that's coming, right? And that it's going to look like the other 2 cycles.
No.
Well, here's the thing, Chris, I'm going to be honest with you. I was a lot more confident before the ETH ETF approval conversation started. You see what I'm saying? Like I was really in the camp of like, we're going to see a swell of Bitcoin dominance during this cycle that we've never seen before during the last 2 cycles. And I'm still in that camp. I believe that definitely. We will see that dominance number reach all-time highs. And that's what I'm watching. But at the same time, it looks like the Wall Street gang has figured out that this is a huge money grab and they want in on the action. And, there's nothing that stops them from pushing the pace at a pace that's going to break on some fronts. And so, like I was talking about earlier with you, is like, what's next? If Ethereum's approved, then what's the next one? And what's the next one? And where does that failure point happen? Because it's inevitable if they continue to approve them that there will be failure points. And why do we know it's inevitable? Take a screenshot year to year of the crypto top 10 list from dating back from, it's like shuffling a deck of cards.
Changes. Yep.
Yeah.
Awesome again.
He popped out, but I'll jump on. For example, why will there be, because of an Ethereum ETF approval and availability to quote unquote clients, why does that push Bitcoin higher? And let me give you some on the street level type of information. You can go and look, because there's been this conversation since the 19B-4 approvals have happened. They're not going to trade until the S1s are done, and that may take a month or two. But there's been conversations across Twitter in the ETH community. They've been working really hard, because the conversation has been, what's the one sentence or two sentence narrative associated with traditional financial folks to understand, Ethereum? It's very easy with Bitcoin. It's digital gold, right?
Yeah.
2 words, digital gold. Easy for people to understand. Store of value, easy for people to understand. Finite supply, limited supply, 21 million.
Well,
easy.
Can I just pause you real quick on that note, Andrew?
No, you cannot. I'm not going to allow you to pause me.
The only thing I will mention is like I think it's resonating though, because there are so many other forces that are forcing it to resonate, right? If we didn't have inflationary numbers as running rampant, if we didn't have global economic civil unrest, if we didn't have political division, if we didn't have all of the wars and rumors of wars that are happening over the seas, all of those things contribute to this undertone of fear in the human psyche that that really starts to make them go, what happens if? And when you start asking the question, what happens if you know anything about Bitcoin, it's center stage in that equation.
It's the
right?
answer to what happens if, right?
It's the answer to what happens if.
Yeah.
And so if you just proposition
No.
to wealthy people, that's what you call an insurance policy. And if you talk about widening the channel of wealth attached to the Bitcoin purchases, it's talking about every high net worth person having a 5% allocation in Bitcoin for the what if scenario. And that train has left the station. It's not coming back. It's got a full head of steam, and there's no chance ever that it returns to where it was, because unless SHA-256 gets hacked, it will continue to be the pristine, already distributed store of value. And here's the point that I even make to people. Let's say the Bitcoin network fails. That still doesn't kill Bitcoin. It's already been created by that network. That network's highest and best use was the inflationary distribution of the currency through proof of work means. That's already 90+% done. We've lost more Bitcoin in boating accidents than we have left on the chain to mine, right? And so for all intents and purposes, the asset's been de-risked from an inflationary perspective. So let's just say the network fails at this point. There's nothing that keeps us from propping up a non-proof of work network to transfer 1 Bitcoin from here to there. And it's still the original Bitcoin that you all bought. It's still the same. It's still everything. The future of Bitcoin has some iterations, in my opinion, to its full development, and it's based upon the fact that the proof of work has done its job. Let it run its course, but there may be a pinch point, in my opinion, whether it's at the 21st millionth Bitcoin or whether it's the 20th or whatever. There's going to be a point where either there's a pinch point in manufacturing capacity through ASIC providers. There's a pinch point in electricity consumption or the cost of the electricity. There's a pinch point in the fact that there was a catastrophic event in some of the concentration risk in the mining farms that we like. There's so many existential risks that pose a threat to that yield curve or that hash rate curve staying stable at a parabolic rate. I can't even mention them all. But parabolic curves don't last forever. And there will be a time where we have to rethink, how do we have a ton of hash power that's not concentrated, and that provides the benefit of security and stability of the network, but also doesn't really provide any on-chain benefits? It provides maybe off-chain benefits, right? If Twitter allowed you to get a orange check mark by plugging a miner into the wall, and they gave you their $19 a month subscription service for free, and they got the benefit of the mining protocol and whatever the yield was, that would be a real world example of incentive versus an on-chain example of incentive. And I think the world is going to have to come to the grips of, if we want the highest hash rate, the highest security, the longest longevity in the network, we're going to have to start subsidizing the on-chain incentives as the block rewards go down.
You see, this is why I keep Tillman around. It's just the nerd factor, right? Like, I mean, the level of intelligence is on another level. Shea 256, like, half of us don't even know what that is, but it just comes flying out of his mouth like it's no big deal. I mean, the truth of the matter is, in our partnership, he's the smart one, I'm the pretty one. Let's make that very, very clear here on this stream, okay? Bitcoin and beards, there's a line of demarcation. What I was saying about Ethereum before I was so rudely interrupted was this: is that the movement that will that there's been to try and create a narrative. There are personalities that have been pro Ethereum and just Ethereum maxis, right? That group exists in a significant way, crypto Twitter. And they can't come up with anything meaningful. They've tried in the past 3, 4, 7 days. They've really tried hard to come up with a narrative. And I've seen things like digital oil, internet bond. I'm like, what the heck are you talking about? Like, digital oil's like kind of sort of halfway decent, gas fees, blah, blah, blah. But internet bond? What are you talking about, right? Like, nobody's going to understand that, right? Digital gold, sure. Internet bond, I mean, it is a difficult narrative from a marketing standpoint to make to people that are 67 to 81 years old, because those are the people still sitting in those wealth management meetings every quarter with 4 advisors across from them, and another quote unquote expert in an area of expertise that they've got a concentrated position in, right? That's what those meetings look like. So you think any of those people are going to be like, listen, we need to talk about the new internet bond. Have you heard of it? Like, no chance. Nobody's having that conversation. So I do find it interesting that I think short and medium term there's going to be noise, positive noise associated with crypto overall and Ethereum ETFs. But I think it turns into just as big a catalyst for more flows into Bitcoin overall. And I think that's now my 5th out of 9 catalysts for upside for Bitcoin on this show.
Yeah. And I think, one of the things I think all this kind of comes back to is that point you made about, the reason people like Goldman Sachs and whatever in this, it's all about the options. It's all about the derivatives, right? It's all about Bitcoin being the base, because I don't know if a lot of people tuning in really understand just how many magnitudes greater these, these futures, these derivatives, these options markets are than the underlying that they're based off of. And when you look at something like Bitcoin, which is, absolutely, listen, this is as many are going to be. And to Tillman's point earlier, we may not even get to that point where we mine them all. But at this point, does that really matter? Because most of them are out there as it is.
Well, you can go back to the financial crisis, right? So, anybody on this watching this stream, go watch The Big Short, this weekend or something. And you'll come across a couple different times where they do the best that they can talking about and explaining collateralized debt obligations, right? CDOs, yeah. And frankly, all those are that mortgages that were effectively derivatives of derivatives of derivatives of mortgages, right?
Yeah, but let's for the layman, let's explain what that means. It's like going to Vegas and there's people sitting at the blackjack table and they're playing cards, right? And they're betting on their hand with the casino. But it'd be like me, Christopher, and Andrew standing behind those people and betting on those people whether they won or lost. So there's side bets on the original bet, right? And they're an incredible tool to create fees for large broker dealers. They're an incredible tool to incentivize people into new markets and create new liquidity pools. But it's the building block of how every financial market is created, right? The higher risk involvement is shouldered on the derivatives, and those derivatives fail. And it's okay that they fail because they provided this overall momentum to the primary asset, the Bitcoin in this instance.
What's the primary function of a bank? It lends money and earns interest, right? So collateralized debt obligations are, that concept on steroids and Hulkamania, right? So it's layer upon layer upon layer upon layer of what Tillman just talked about. In that particular clip in The Big Short, it was, you and Tillman betting on the guy that's about to bet on a hand, but then there's somebody behind you betting on those two layers, and then another layer and another layer and another layer.
And then those bets stay on the books, and you roll them all up into a bundle and sell the bundle.
Then you sell them, right? And you attach a yield. You attach a yield to that entire bundle, right? Yeah. And so the point I'm making, though, is that we're going to get options on the Bitcoin ETFs. And the point that Tillman has made is these institutions are holding all of that Bitcoin. They're just not. That would be the equivalent of banks bringing in, billions upon billions upon billions of dollars and not doing anything with it, as opposed to lending it out and creating more yield on that asset, right? That's not. There are going to be versions of Bitcoin products that end up being lending products. Yeah. It's going to take a lot of time to get there because there's been blowups just in the past 2 years that have been problematic in the crypto space. But banks think they're smarter than everybody, right? Pure and simple. They think they're smarter than everybody. So there will be lending products. There will be leverage products. Much further beyond a Bitcoin ETF, 2x long ETF that comes out, at some point that's associated with spot as opposed to futures. There's going to be, there's going to be an entire ecosystem that finds itself, sprouting up around Bitcoin as a hard asset, which again, now I think we're on 0.7 short and medium term. That just means Bitcoin goes higher. That's what it means. They have an incentive for it to go higher so they can layer percentages into how they want to lend and leverage it so that they're protected in case of some sort of drawdown in the price.
Yeah, and that's what myself and Gary Cardone, we talk a lot about this, not just on the spaces and on his Cardone Corner and stuff that we do, but the kind of thing we talk about, everybody's always like, oh well, I want to spend it and whatever. Okay, well, do what you have to do, but at the end of the day, if you've got any other choice, hold on to that Bitcoin, because at the end of the day, again, it's the idea that it's an asset that's going to continue to increase in value. And at some point, you're going to get decent lending ability with it. I mean, right now, you can borrow right now for ridiculous, interest from, internet, crypto-based companies. But we're talking about, mainstream kind of lending coming out of that. And, when you look at, well, how do, because everybody coming into Bitcoin, well, most people, right? Their ideas, listen, I want to jump from where I'm at socioeconomically up to the next level or up a few levels. And, you won't be able to do that if you spend it. But if you have the conviction, if you understand what we're talking about here today and what we constantly talk about, which is this idea that this is going to be the base of something much, much bigger. And you're going to have opportunities to basically live off your Bitcoin through, appreciation and borrowing against it, or some other financial product that comes off that without actually having to get rid of it. And that's when you talk about the ultra high net worth, those folks like that, what they do is they buy the assets and, and they hold the assets, and those assets appreciate in value, and this is the idea, but potentially on an even exponentially greater scale when we're talking about Bitcoin.
There is a movement right now, and we can give you a micro look at it, because in our company with our customers, we are getting constant requests about, when are you guys going to be done building your Bitcoin algorithm, and when are you going to release it, and how can I get my hands on it, right? So that's a direct line to, Bitcoin ecosystem type products. Like, how can I use my Bitcoin to get more, or to generate yield, or to generate return? Yeah, I've got it here and it's sitting here, but it's such a remarkable asset. There has to be more that I can do with it. So that exists in the public's mind. It absolutely does. So, our work, we're creating an algorithm that not only leverages the movement and volumes and changes in price on a daily basis, but then leverages the long-term holding capabilities of Bitcoin itself. And, about a week from now, we're going to open ourselves up to taking basically pre-orders on something like that. We expect to hardly be able to handle it, to be honest, based on the conversations that we've had. I'm not kidding. Like,
no, that's nice. I like hearing that.
Yeah, it gets brought up to us all the time. And when we bring it up to somebody that we're talking about, their eyes get as big as saucers. And so I bring it back to, the ownership of Bitcoin as an asset is much more prevalent than probably we even think. Yeah. Certainly amongst high net worth and ultra high net worth individuals. It's more than what we think, because they've gotten beyond the point of, should I own Bitcoin? They now own Bitcoin, and it's like, okay, what can I do with Bitcoin? I'm doing these other things with my other assets. This one, though, seems like the most valuable, but I should be able to do something with it, right?
Yeah. Well, so it's going to serve a couple of purposes. Number one, there's a lot of people that want to accumulate Bitcoin that don't know where to start. Mm-hmm. They don't know how frequently they should buy. They're not exposed to any of the dips that we've been exposed to, so they don't know the volatility. And there's so many people that I know and talk to that end up just, if they're high net worth, buying one Bitcoin. I've heard that 100 times. It's like, yeah, I finally got up to I just bought one, and they have one on cold storage, and it's one Bitcoin, and it's sitting there doing nothing. And to Andrew's point, they're kind of kicking it every once in a while, going like, do something. And the Bitcoin, though, for the vast majority of people, is the savings account. They're putting $300 a month, $100 a month, $500 a month, $1,000, whatever the number is, and they're just dollar cost averaging into a position, which is the most prudent way to acquire a position. No one will argue that. And so the purpose of our automation is to take the grunt work out of accumulating a position based upon having rules that buy on down days. Because if you're going to accumulate a position, you shouldn't buy on the screaming up days. That's just kind of common sense. So it's like it applies a layer of discipline to the acquisition at a dollar cost averaging basis. And then at the same time, if that position is able to, if that trade in that specific day is able to make you a certain yield, then the cash is harvested, or the immediate day trading profits is harvested. So on days where the automation will make a bad choice and the trade works against you, you still purchased a DCA point at a low, and so you've acquired a little portion for your long-term holding bag, and you've served that purpose on that day. And then if that day happens to be a great yielding day, and it actually turns out to be a great trade, then you've acquired more cash that then allows you more trading opportunity the next day because it was a winning day. So we're trying to paint this best of both worlds scenario where if you want to acquire a long-term bag, then you deploy this automated strategy, because when it doesn't acquire the bag for you, it's making yield. And when it's making yield, it's not acquiring the bag. And so it's working with the cycles of Bitcoin to acquire at the lows and start DCAing at all of the low points. And at the same time, taking advantage of these wild swing upsides that can give you disproportionate returns in a short period of time. But back to you guys' point, I wanted to say something earlier. You said, Chris, you said the word opportunity.
Yeah.
In University of Texas Business School, I learned something that has plagued me the rest of my life, and I think about it every day. And it's the opposite of an APR, right? A lot of people will go, if I'm going to borrow money, well, I want the cheapest APR. And they understand that concept of the cost of the capital, right? But there's a hidden cost to spending your capital. The cost is the opportunity cost that you're sacrificing. So the question is not, should people sell Bitcoin? Well, let me tell you something. If you got 4 kids and you're not putting food on the table and you just got laid off and you've got a bunch of
Do what you
Bitcoin,
got to do.
you sell Bitcoin, because shelter, water, food, children, those are priorities, right?
Yes.
But the opportunity cost is still the same. You're losing the opportunity cost of the Bitcoin that you're selling. Whereas if you have other assets that you can liquidate, start to judge the assets against the opportunity costs that you're sacrificing. Because if you've got a really fancy car that has equity built up in it, right? And you're going, you know what? I can sell that, or I can sell my Bitcoin. Well, one, you're selling a depreciatory asset that you won't have equity in there for long. And number 2, you're keeping the opportunity cost, the opportunity upside that you have in Bitcoin. So you're getting a reduction and a benefit. You're getting compounding benefits on that decision.
I love that you said, because, again, I'm going to bring up Gary here again, because he's really out there doing exactly that. I don't know if you guys have been following him for a bit, but he sold one of his properties, just over $2 million, used it to buy Bitcoin. He's trying to sell his current, his property. I think he's looking for like 200. Well, right now it's 252 Bitcoin or something like that, 12 million, something like that. He's selling another depreciated asset. He just got a brand new, basically within the last year, I think it was a Range Rover, high-end model autograph edition there, that he's trying to sell again to acquire more Bitcoin and just drive around in his 2016, vehicle.
So a great approach, and I'm not a financial advisor, so I'll leave it at that. But I will say this: the difficult thing that he has in front of him is that you can sell assets quicker than you should acquire Bitcoin, right? You sell a $2 million house, you got $2 million cost, you've decided, hey, I'm going to push this into Bitcoin. Well, do you buy $2 million of Bitcoin in one day? No, you don't. You've got to deploy that capital wisely and in the most spread out micro purchased fashion that you can stomach from a management perspective. Like in a perfect world, you'd buy every day on every dip. And that would be the steadiest curve that you could acquire Bitcoin on, right? But people don't have that discipline. It's hard. You have to sit there. It takes a lot of discipline. It's difficult. So what the point of automation is like, hey, how do you get something that's disciplined for you that does that for you? But I applaud what he's doing. I think that's a noble thing. And I think it's teaching people things about capital that are not taught in school today, that if you understand, it reminds me of, Einstein said the laws of compounding are the most powerful force on earth and the 8th wonder of the world. You either understand them or you're a slave to them. Those are Einstein's words.
Yep. No, exactly, man. And man, what a great conversation this has been. Man, I think this is going to be awesome, guys. This went even better than I thought it was going to the first time, since we just kind of all jumped into it last second, right after the long holiday weekend and all the news coming out. So yeah, man, hey, listen, those of y'all watching along here, again, follow us, hit the like, subscribe to the channel, share the link. We'd love to have all that. We're going to do this each Wednesday. It looks like we'll do it at this time, 11 a.m. Central, 12 p.m. Eastern. And, again, we'll just have these big conversations about Bitcoin and pretty much everything related to it. Again, you've got 3 different guys here with a wealth of experience in 3 different areas of this, all kind of talking about, this is what we're seeing, and this is how we're seeing, and this is why these things are important. And so I think Andrew said it great earlier. He said this is the perfect time to be doing this.
It's perfect. It's a perfect confluence of events, and Bitcoin, because we've been in this, in a bubble for all intents and purposes, not a price bubble, but just an attention bubble associated with crypto Twitter, right? We've lived in that space for a long time. We have no idea how big it's going to get over the next, 2 to 4 years. It's going to blow people's minds. And, again, you don't, this guy said tokenized beard.
Well, that's our next page. We're doing an NFT beard launch, and we're going to vote on who has the best beard, and I expect to be victorious.
But it's going to, all of the pins are set up the right way. And like I said, there's just catalyst after catalyst after catalyst for hire. And there is not a meaningful outside of a black swan event that even then would have to be so catastrophic to, make Bitcoin go down so precipitously that everything else in life and in the financial world would also be just destroyed. And you can't predict that stuff, but the way the machine is set up right now, it's higher for longer.
Yeah, I agree. And I think Tillman agrees as well.
Yeah, I would definitely agree. I think that, the volatility, to me, I think Fred Krueger said it best. I met him for a little brief Bitcoin conversation, and he said to me something I had never heard before, and so I have to give him credit. I was arguing that maybe it wasn't going to be as steep of a climb as he thought. He's a big believer in pretty big price appreciation over the next cycle. There's a part of my brain that says that these market makers want to show stability, and so they're going to almost create stability, and the ETFs give them the mechanism to do that. But I will tell you something that the thing that he said was that the institutions, the high net worth individuals, the people who have the most money in the world wait for assets to be de-risked.
Yep.
Mm-hmm.
Yep.
Mm-hmm.
I think we're at the genesis of that. I think we've done it, but it was like last week. So I'm really excited to see if that's true. I don't see anything but up.
Well, think about it this way. There's no CZ tweet that exists anymore to move markets. There's no Sam Bankman-Fried tweet to move markets. All those guys have been removed from the board. That's the de-risking. That's gone. That stuff is gone forever. And so you got guys in suits with well-known names on Wall Street and Midtown Manhattan that now are having the conversations on financial networks. Different, absolutely different altogether.
Yep. Best risk-adjusted point enter, I believe, are these days right now. All of us and many people listening got in much, much lower, but we took on significantly more risk to do so. Right. Now with, everything that's happened with Binance and FTX, and we've got the spot ETFs, we've got options and derivatives coming, and even, again, bringing in the Ethereum ETFs, I think just bolsters the whole Bitcoin argument, and the whole, if you think greater financial system argument as far as what y'all were talking about earlier in the show. I mean, I think, people are going to look at it, get unit bias, are going to look and go, oh man, I've only got $1,000 and it's 67,500 right now. Man,
but that's not what it costs to buy a Bitcoin ETF. It's $32, $41.
Yeah. I'm going to make a prediction,
$53,
though, that if you think Bitcoin is polarizing at the dinner table now, I based upon David from BTC Magazine, BTC Inc. Predictions, I think that Bitcoin, like Andrew said, could be at the right time, the right place to play a very impactful role in this election.
Yeah.
And if we get the wild card that I think we might get, you're going to see a divisive nature to the Bitcoin conversation unlike anything you've ever seen before, which,
Yeah.
no news is bad news. It's kind of like publicity is publicity, and it will be in the mouths of everyone at that point. But if it's a rally point politically for the election, it will inject a fever into the Bitcoin community that has not been seen for a very long time. And it will almost inject an NFT, runes, like a bleeding edge relevance to Bitcoin's mainnet that if it's mentioned in the debates and it continues to take on this momentum in the political sphere, I anticipate some wild rides, and I do think that the folks over at BlackRock and the gang, if you will, I don't think that that's lost on them. I think they probably see it more clearly than any of us.
Yeah.
Definitely. And we'll be here to talk about it, guys. So,
Yeah.
hey, we appreciate you guys jumping in as always. I think that'll end it here. We've actually gone on an hour here, and I feel like we could continue talking for hours.
We could.
We'll let you guys, we'll give you guys a break here. Like I said, every Wednesday, join us here. You can catch, we're going to simulcast this here on Facebook and YouTube and X and Twitch and all that. Those links are posted out there when I post it. But other than that, let us know what you're thinking. Send some feedback, leave a comment, be nice. We're all old, big guys.
You can say
FAFO,
I'm old,
right?
and I'm ugly. I already know that. So you're welcome. If you want to be mean, just stay inside those lanes and we'll be good.
All right.
I'm not signing off on that. I'm not signing off on that. I'm not signing off on that at all. No, I'm pretty, baby. I'm pretty.
Oh my gosh. I can't wait till next Wednesday, guys. As always, thanks a lot for joining in, guys. Y'all be safe out there. Keep acquiring that Bitcoin. Do what you can to get it. If you got to go mow some extra lawns in your free time, I mean, I'm going to tell you right now, even at my age, in my place, if that's what I had to do, honestly, that's what I would do.
Yep.
Find some way to generate some extra income and do it. By all means, if you need to spend your income because, or your Bitcoin because you have some immediate need for bills or something that have to get paid, you have to take care of your family, of course, do that. But if you've got other assets to sell, I think it would behoove you to really consider, the potential. You got your asset that's probably going to, or whatever you have that's more of a liability, losing value versus Bitcoin that's gaining value. You got to do what you got to do, but we're all about gaining more Bitcoin and holding it there. So that'll do it, guys. Beards and Bitcoin episode 1 is done. Join us next week. And, we'll still look pretty. Tillman's going to argue that point on his end, but that's just
Listen, I was an offensive lineman. My nickname was the Big Uglies, so it's in the description. I'm used to it.
All right, fantastic. Hey, listen, guys, appreciate you all being a part of what we do here. Thank you so much. We will see you next week. Take care, everybody.
See you guys. Bye.